Hey, this is Randy from Funeral Funds of America. In this video, I am going to share with you the actual pricing for $15,000 worth of burial, cremation, final expense, life insurance, or funeral funds for a 73-year-old female. Now, first thing I suggest you do is just go to our website at funeralfunds.com. On just about every page, we have these free quoters. So you can just select the state that you live in, and we're licensed in all 50 states, by the way. Select the coverage amount, and then enter your birthday, fill the rest of the info, click Get Quotes Now. It'll take you to a page that's going to show you the best insurance companies with the lowest pricing available in your state. You can also call us at 888-862-9456. One of our licensed agents can do all of that for you as well. Now, the first thing we recommend a 73-year-old female do if she's looking for $15,000 worth of coverage is to just stop and think, is $15,000 going to be enough for her final expense needs? Now, typically that would involve either cremation or burial. Let's start with the cremation. So the average cost of a cremation right now in the United States is between $1,000 to $2,000. That's where you come home in a cardboard box or an urn. Now, if you're going to have some sort of ceremony with that cremation, like a celebration of life or remembrance ceremony, that's probably going to be $3,500 to $4,500. So let's talk about kind of coverage amounts for that now too. So for that cremation where you're going to come home in a cardboard box or an urn, we would typically recommend around $5,000 to $7,000 worth of coverage. And you might be saying, well, Randy, you said the cremation is going to be $2,000, but we're looking at $5,000, possibly. What's the deal there? Well, yeah, that's right, because our female's 73 years old. She probably wants to make it to 83. And we know that the cost of a cremation right now is not going to be the cost of cremation in 10 years from now due to inflation. So what we do is we actually just build a little extra money in there for inflation. And what that does is it inflation proofs your plan in the future, but also, God forbid, you died sooner than you thought. There's some extra funds there to pay off maybe some unexpected bills like, maybe medical expenses or pay off some credit cards or something like that. So it inflation proofs you in the long term, but also provides extra coverage short term. So for that cremation where we're going to have the ceremony plus the cremation, most people would probably look around $7,000 to $10,000. Again, the higher amounts inflation proofing the plan, the lower amounts just providing some extra coverage. God forbid you died sooner than anybody thought. Now for a burial, the average cost of a burial right now in the United States is right around $10,000. So, that's if you were to die today. But, most funeral homes, if you walked up to them with a $10,000 check, they would accept that and get things done. Wouldn't be anything fancy, I can assure you of that, but they'd get things done. So it's just hard to imagine that they would say no to that, let you walk out the door and, walk 2 blocks down to their competitor's place and give them the money. Just understand that $10,000 it costs right now, it is not inflation proofed. And, as far as coverage, most people we help that are age 73 or so, they typically get around $10,000 to $15,000 coverage. Some people might get $20,000, but, it just depends on your budget. What we'd recommend is just look at what fits your budget, get that amount, even if that's $10,000, that covers your most immediate needs. And then what we can always help you do is add more coverage later. So yeah, we're very flexible that way. We can help you out with that. Sometimes people will say, well, I want to get some extra insurance and leave money behind for the kids, like 30, 40, 50,000. And because they're 73, their price tends to be higher on, those higher amounts. And sometimes people go, well, nope, it's too expensive. If I can't do everything, I'm not going to do anything. And then what they've just done is condemn their kids to paying for their final expenses. And, so don't be, you kind of maybe just don't be that way. You're the one that waited until 73 to get this. If you would have done this earlier, it would have been more affordable. So it's not your kid's fault that this is happening. It's your fault. So what we would typically recommend in that situation, just get what you need for your final expenses first. And then if you ever want to in the future, come back and get a separate policy for your kids. We can certainly help you out with that. If you've got the financial means to do it all at once, certainly we can help you out with that. Just most of the people we help are on a fixed or limited income. Now, the one thing we always recommend is first day coverage or benefits. We do not recommend those plans with 2-year waiting periods at all. And we'll talk about those in a minute. But yeah, what first day coverage means is hypothetically, if your policy were issued and approved today and you passed away tomorrow, the insurance company would have to write out that check for 10,000, 15, 20, 25,000, whatever it would be. They'd have to write that out. It's the best coverage. It's also the lowest pricing. But sometimes people will say, yeah, you're right, Randy. I do like that first day coverage, but I've got some health issues and I'm worried I won't qualify because I know they ask health questions. To which we say, hey, that's our problem, not your problem, at least from an insurance perspective. What we mean by that is that's why we work with so many different insurance companies. They all have different health questions. They all have different underwriting. And really 90 to 95% of the time, we're able to get people either first day coverage or benefits. Really, the only reason we wouldn't be able to do that is if you just waited too long and you had some really significant health issues going on, like maybe a terminal illness and you're going to pass away in the next 12 months, or maybe you have dementia or you're on dialysis or in a hospital or in a nursing home. If there's something like that, then we would typically refer you out to a different insurance company. The other thing that seems to happen on a weekly basis is that somebody will call us up and say, hey, we had a family member pass away this last week and they didn't have insurance. We don't have any money. Their body's down at the morgue and or at the funeral home. And the funeral home's not going to do anything about this till they get a check in their hand. So we need to get this insurance right now so that we can get the funeral home paid. And we have to let them know there's no insurance company in the United States that's going to offer a policy on a dead person. That is not how this works. You've actually got to be alive to qualify for this insurance. And it's so sad that this person died without insurance because now their family has to pay the price. And they knew they were going to die someday. And they probably looked into getting this insurance at some point in the past and they just didn't do it. And now their family has to deal with it. And typically they deal with it by putting these expenses on their credit cards. And now they got to pay 26% interest probably on average. So yeah, don't do that to your family because they're going to be paying that off for years and years and years. And, just, you could have done everything else in your right in your life and then mess this up and it will just mess up your legacy. When people think of you, they may think of all the great stuff you did, but then you finished it off by socking them with these bills when they probably couldn't pay it. Now they got to pay 26% interest. So yeah, don't be that person. We can help you out with that. If your budget's tight, we can start with something smaller. Always get you more coverage. Add more coverage later. So what we don't recommend is those plans with 2-year waiting periods. Yeah. Colonial Penn's one of those companies. You probably didn't know this, but their $9.95 plan, that's a 2-year waiting period plan. Ouch. Yeah, you don't want to do that. Yeah. So you want to avoid that. And Colonial Penn's not the only company. There's other companies out there like Mutual of Omaha, their United of Omaha line, AIG, Gerber. Man, there's just so many other different companies out there that's the only thing they offer is a 2-year waiting period. And some of these companies have done an amazing job at convincing the American public that, if they're over age 50, the only thing they're ever going to qualify for is a plan with a 2-year waiting period, to which we always say, don't believe such nonsense because we help people with first day coverage all day long. Yeah. Now, our 73-year-old female probably just got done watching one of those Colonial Penn TV commercials, and she's probably thinking, I outsmarted them. I waited until age 73. Now I'm going to get my insurance. I'm going to probably get $20,000, $30,000, $40,000, maybe even $50,000 for $9.95. And then she talks with a Colonial Penn agent or goes on their website like we've done for you here and sees that a 73-year-old female, 1 unit of coverage, $9.95, right there, $9.95 is only going to be $846 worth of coverage. That's not even going to buy a cremation in any part of the United States that we're aware of. And it really wouldn't matter even if it did, because this plan's got a 2-year waiting period where it's not going to pay any death benefit if you die for any health or medical reason in that first 2 years. So yeah, why would you start with a plan that's just not going to do anything for, just not provide adequate level of coverage? Now, there's some people out there that would say that, companies like these that offer these teaser rates, they say they offer them not to actually sell the teaser rate plan, but to get your information and get you in their marketing funnel. And then they get on the phone and they show how measly that coverage is at $846. and then they try to upsell you into more insurance, which is vastly more profitable for them. But, we would never say that about Colonial Penn, but some people do. And you might just want to consider your thoughts on that, considering $995 only buys $846 worth of coverage. So we want $15,000 worth of coverage here. The challenge is Colonial Penn only goes up to 15 units, not 15,000, but 15 units. And I don't think it's going to get us to 15,000. Look at that. You can't, $12,690. You can't even get to 15 units if you're a 73-year-old female, or 15,000, I should say. You can get 15 units. That's around $150, but that's $12,690. Let's go see what, let's do this. Let's go see what first day coverage would be. So here we go. We got 15,000 female, age 73. We're going to click get quote. And again, this is 12,000 for roughly 150. Look at this. We can get 15,000 for $92 versus 12,690 for 150 roughly. What we consistently see is that Colonial Penn is right at around 200% more expensive, just on average, than some of these other companies with first day coverage. Again, it may be plus or minus, but it's generally right around 200% higher. So why would you ever get a plan that's that much more expensive? Because this is roughly 90, this is roughly 150, so around $60 more a month. And you're going to overpay that $60 a month every month for the rest of your life, as long as you keep this policy. So, and it's going to have a 2-year waiting period, but that $60 a month times 12 months is $720 extra a year. If our 73-year-old female lives another 10 years up to age 83, you're going to overpay roughly $7,200 on a $15,000 policy. Why would you ever do that? Why would you not want to keep that $7,200 roughly in your bank account rather than giving it to an insurance company to put into their bank account? And they're going to give you a 2-year waiting period instead of this plan here, which is level, which means first day coverage. Yeah, you need to be a smart consumer, and it's okay if you're not a smart consumer. Just let us help you be a smart consumer. That's exactly what we do. We can help you out with this. Let's look at some other companies here. Just see what this would be. So we're like, again, 92, like Lumico here. They're level coverage, but roughly around $20 more a month-ish. Pretty close, just roundabout, but that would be an extra $240 a year. After 10 years, you have overpaid around $2,400. Why would you do that? Why would you pay an extra $2,400 when you don't have to, if you're just a smart consumer, or you let us help you be a smart consumer? Yeah, just let us help you with that. Let's go down and look a little more. Here's one other company. You can check out all these companies, but Lincoln Heritage, yeah, they're a fine company, I guess. But look at that pricing, $137. Yikes, that's high. It is first day coverage, but why is this so high? The reason is they've got a deal where if you pass away, or when you pass away, they will actually supposedly call 2 or 3 different funeral homes to get the lowest pricing, maybe do a couple other things, but they don't do that for free. They charge. That's built into the rate, which is much higher. So this is basically 137 versus 92. So that's around $45 more a month. Lincoln Heritage is than this company right here, $45. So $45 a month times 12 months, that's right at around $540. And if you multiply that times 10 years, our female 73 would be 83. You would end up overpaying roughly around $5,840. So you got to ask yourself, is that worth paying a company, actually worth overpaying a company, around $5,400? Is it worth overpaying a company that much to make 2 or 3 phone calls and maybe do a couple other things that might only take an hour or so to complete? Boy, a lot of people would say that's a pretty good payday for the insurance company at your expense. And I guess we would tend to agree. We just think that your money's better off in your own pocket versus being in an insurance company's pocket. So what we recommend is getting this lower pricing here. We can help you out with that. We can help you out with this. And then what we do is we provide a free funeral and estate planning guide, and you can download that off our website. and then print it out. And then once it's printed out, you just complete it. You write who gets what goes where, what you want to happen after you're gone. And then you keep that with your insurance policy. And then when you pass away, your family member's going to have everything all in one place. And they're going to have the peace of mind knowing that you not only protected them financially, but you also protected them emotionally with the funeral and estate planning guide. The insurance and the funeral and estate planning guide work together. And they will know that you love them not only in life, but you actually love them in death, which was actually when they would need you the most because they're coping with your being gone. And you left for them that insurance money and the funeral and estate planning guide. What a wonderful legacy to leave behind. We can help you with a legacy like that. We have a special quota for our YouTube visitors, funeralfunds.com/YouTube. You can get the lowest pricing, the most discounts there. You can also call us at 888-862-9456. One of our agents can get you pricing, help you get approved, whatever, even if you just have questions. But if you've got an existing policy that you want us to price shop to see if we can get you better pricing, or you want to add coverage to that, we can help you out with that. If you need a brand new plan or just have questions about the insurance, what might be appropriate, pricing, what you qualify for, we can help you out with that. But we look forward to that day when we'll be able to get you the most amount of insurance for the least amount of money. We would be blessed to help you out with this. Until that day comes in the future, you take care, you stay safe, you have a nice day. Bye-bye.